A forgotten altcoin has been beaten down more than 80%, then suddenly snaps a 7-month downtrend line on rising volume at the exact moment its total value lock screams past $5 billion. Whales are publicly tweeting that they're buying, and Coinbase quietly slips the token onto its listing roadmap. That coin is Ethena's ENA, still trading at roughly 33 cents. In the next few minutes, you'll discover why the chart is flashing a textbook double bottom revival, where my 3 profit targets sit, including a stretch goal at $2, and which part of the unlock schedule most traders are misreading. Stick around, because halfway through, I'll also reveal the precise stop loss that protects the downside while leaving the upside wide open. Ready? Let's dive in. Take a look at the daily chart. The yellow descending trend line that had capped every rally since January has now been obliterated. Volume expanded into that breakout, and price pushed into an area on the visible range volume profile where liquidity is almost non-existent above 40 cents. So, rallies can travel fast. The most obvious support rests at this green line. That's the super trend indicator. My personal invalidation is simple. If a weekly candle closes below 23 cents, the trade is dead, and I'm out. First profit is parked at 67 cents, the 382 Fibonacci band, before meets a fat node of historical consolidation. Heikin-Ashi RSI momentum, which spent a few days languishing in the basement, is curling up exactly the way it did before January's 4 times run. Statistically, that alignment alone pushes probability toward at least a measured move into the mid-60s. Charts rarely moves without big wallets, and right now some serious names are planting their flags. Mr. C shows the same double bottom that led to a 600% explosion last cycle and warns followers not to sleep on the signal. Eliz, whose timeline influences 550,000 traders, tells everyone to build an ENA position on every dip and backs it up with a clean rounded base chart. CryptoGodJohn, a trader famous for fading hype rather than chasing it, has started a fresh spot stack at 32 cents. Even the usually cautious Omar Fade says a daily close above 48 cents flips the broader trend and opens the road to 73 to 80 cents. Quiet accumulation inside our mapped range is becoming loud. If you know where to look, shift the focus to fundamentals. The DeFi Llama overlay shows total value locked surging from $2 billion to nearly $5.8 billion in just 3 months, while price actually drifted lower. That kind of divergence screams undervaluation. CryptoEd's metric summary tells the same story. Market cap sits at $1.96 billion, yet the protocol is already spitting out $233 million in annualized fees and almost $20 million in pure revenue. When value accrual and network usage run miles ahead of token price, history says a violent repricing tends to follow. It is exactly what we witnessed last year with Lido and Pendle. News gets better. Coinbase has now placed ENA on its asset roadmap. Research across dozens of listings shows the median move inside the first 30 days is a 91% pop, and ENA's float is lean enough to overshoot that average. Timing looks engineered. The roadmap drop coincides with Ethena's collaboration with Securitize to launch a real-world asset-focused chain. Traditional finance liquidity and DeFi rails converging on the same stack is irresistible to institutions that cannot touch offshore exchanges. Coinbase support means frictionless on-ramping at the click of a button. Many traders panic whenever they hear the word unlock, so let's clear the fog. Only 39% of supply is currently unlocked. Emissions do rise each quarter, yet the curve is gentle rather than cliff-like. Team and investor allocations together remain comfortably below 30% until well into 2027, while ecosystem rewards keep the flywheel spinning by deepening liquidity and user incentives. If revenue keeps compounding at its present clip, token emissions fade into background noise. Risk exists, but it is measurable and therefore manageable as long as your stop-loss stays sacred. Let's stitch everything into a plan. My first profit slice of 25% is ready at 67 cents before the point of control. The core 50% unloads around $1.10, the 786 Fibonacci level, and a handsome psychological milestone. The final quarter rides all the way to $2, matching the 1.618 extension that mirrors January's parabolic leg. Remember the exit hatch. A weekly close under 23 cents invalidates the setup period. This isn't Moonboy hopium. It's structured asymmetric risk. Reality check. Even if ENA rockets 6 times, most traders will quietly hand those gains back during the next chop because their capital just sits there. That's why I wrote DeFi Financial Freedom, the ultimate beginner's guide. For less than the cost of a latte, I walk you through how I stake farm and compound yield so that every rally, including ENAs, snowballs into growing passive income. It's bite-sized, zero fluff, and you can finish it tonight while Netflix drones in the background. The link is pinned in the top comment. Treasure is only useful if you know how to keep it. No analysis is complete without downside scenarios. A Bitcoin slide below 90,000 would yank liquidity from every alt, and ENA would not get a free pass. A governance vote could in theory accelerate emissions, though the odds look low right now. Finally, if the real-world asset narrative stalls, momentum could dry up before targets hit. Those are the cards on the table, which is exactly why I refuse to compromise on the 23-cent invalidation level. Risk first, reward second, ego never. So here's the lightning recap. The trend line is broken. Whales are loading, total value locked, and fees have outpaced price buy miles. A Coinbase catalyst is locked in, and the trade offers 3 methodical profit checkpoints against a clear stop. If you appreciated a hype-free breakdown that actually shows the receipts, destroy the like button because it tells the algorithm you value real alpha. Drop your first target in the comments. I personally answer every thoughtful question. Hit subscribe and ring the bell so you don't miss the next analysis. End screen cards will point you to which videos you should watch next. Stay sharp, stay solvent, and as always, this is educational content, not financial advice. See you tomorrow in the next one.